Now, Todd, with your space, do you have to come up with any type of sophisticated structuring when it comes to the cannabis space and what you work with?
Yeah, by and large, banks won't even let me in the front door.
Yeah.
So traditional financing is out for us. We rely on private financing exclusively from individuals and groups. What we've done because of that, we can't use the banks, is we've ended up doing some mostly own seller financing. So for instance, we just closed 2 weeks ago a deal to buy a manufacturing extraction facility in Massachusetts, $9 million in annual revenue. We purchased it for $2 million down, and the other $4 million seller financed at 5% over the next 4 years. So we essentially bought the building for 1.5 times EBITDA out of our cash. And we've done this several times right now. We recently bought a dispensary back from True Leaf in Worcester, Mass. For $1 million that we ironically sold to them for $13 million 2 years earlier. Capital has really dried up in the cannabis space, and we're deep value investors at heart. So we have been going through the space and made a bunch of acquisitions in the last year at well below market prices because other groups can't get financing to be able to make those deals.
Got it. Now, Patrick, I would ask you if you come across sophisticated structures, but I don't know if you know what that means. So I'll skip you and go to Kip.
She's not wrong.
I'm just kidding. You can answer, but I will let Kip go first since I did call on.
Sure if that's a compliment or not.
No, we love having Kip. Kip, I think after every time you speak, we have people that just like flood us and say, "Oh my gosh, Kip is amazing." So we don't hear that about Patrick.
Yeah, I'm a little. See your back.
Yeah, that you like.
Where were we? I have a little different situation because I am a fiduciary, because I am not one family office. I am working with multifamily office as well as other clients. So a lot of what we do, in addition to all the stuff that you talk about at these kind of conferences, we're kind of doing the basics. I mean, we do the basic marketable securities and so forth. But one of the things we've been doing here the last couple of years, because the market's been really kind of weird, we've been using something called structured notes. I won't go into a lot of detail on that, but we've been getting double-digit returns on those with relatively low risk. We do life settlements. We've been doing currency trading. We have a company, if you will, that we use that does those investments. That's been in the 16 to 18% range on an annualized basis. So again, I have to be very cognitive, if you will, about what kind of diversification I'm providing to the clients, because the last thing we want to do, again, because of our fiduciary responsibility, is to put a client in a very risky situation where they could potentially lose a whole lot of money. Yep.
Fantastic. Thank you, Kip, for answering that so sophisticatedly. Patrick, do you have anything to add to this?
I don't even know what the question is. It's like gone.
What is the most sophisticated structure you've used or come across?
You said there'd be no math. Like, I don't understand. In sophistication, the hardest thing is that from back in the day of modeling from GE I was at and all those crazy CMBS CLOs and all that stuff, when you're doing, I'll just take the sector of real estate, the challenge is that you come across these mathematical quants coming up with these crazy models and trying to triple and waterfalls and all this kind of stuff. Honestly, you keep it simple, stupid, to be clear. In the sophisticated side of it, when it comes to real estate, it's just really how are you buying the asset? What's the labor? What's the material cost? What's your revenue? What's your rents? What's the market look like? Is it appropriate to build this particular time? You know, what is the product? Is it going to be receptive by the lenders, other equity participants, other family offices, that type of thing. And then we look at how the metrics look. I don't want to take heavy downside risk on risk to principal for what we try to accomplish. So are you getting equity returns or are you getting debt returns? One of the neat little things that I've seen, I'll just stay with the real estate side, is self-directed IRAs. People are using those and second mortgages on commercial properties as well as residential properties and coming in with just 12% notes. Smart. You get to move your money, and by the way, it's tax-free. So kind of a neat structure. We have a residential redevelopment strategy with an institutional partner to buy 10, 20, 30 homes a month in multiple different markets. And we've had people come up with us, look, I've got 300,000 sitting in an RA. Can I put it into one of your opportunities? Same with the real estate side of it for commercial real estate and multifamily. So I just honestly think you keep it simple.
Great.
Self-directed IRAs are growing.
Yeah, it's
Our investors are self-directed IRA, and I didn't want to know.
yeah, I didn't even. I mean, supposed to be sophisticated. I guess I'm not, but I had no idea that you could actually take self-directed IRA into real estate LP structures. And so it's a really interesting thing how the $36 trillion retirement market kind of keeps it quiet. They actually can control your own IRAs. We know State Street, Vanguard, and BlackRock control 38 trillion or something in assets. I think self-directed IRA is like $500 million or so, maybe $500 billion. And so $500 billion, excuse me. It's a newer thought process that you actually can control your own money. And so it's a newer avenue that you could take that and put into new things that you want to with, I don't want to say risk-free, but you at least have control of where you're going into. And there's, fiduciaries responsibilities. These two are way smarter than I am, where they could put their money, other people's money, if you will.
Sure. Does anybody else have anything to add to that? I'm very proud of you, by the way, Patrick. That was a great answer.